We're going to do something a little different today. I am hosting a bunch of my car friends in my garage, and I'm going to talk to them about insurance. Why don't you come join us? So first, let me talk about how to buy insurance. Okay, there are 3 ways that you can buy insurance. You can go direct to a 1-800 number, like Geico or Progressive. When you do that, you're calling a phone room. You're calling an hourly employee who is going to take your order every time. They will sell you a policy. Will it be a good policy? Will they advise you what things that you could think about? No. Their job is to take your order. You will never talk to the same person twice, and that is direct purchase insurance. The second way to buy insurance is from what's called a captive agent. A captive agent is someone who has a company's name on the sign outside their door, State Farm, Farmers, etc. Captive agents, they're insurance agents as well. They work for that company. That company signs their checks. They have one person who signs their checks. So when you only have a hammer, every problem looks like a nail. And that's captive agency. You only have one product. Some of them will have associations with some other products that they can't do within that window, but that's pretty rare. That's fairly recent. And then you have the third type, which is what we are. We are an independent agency. Independent insurance agencies don't work for any one company. I don't get our checks signed by a company. We get commission from all the different companies. I firmly believe, not just because I am one, but I believe this based on just making good sense, an independent agent is the way to go because an independent agent understands insurance. Not just their product, they understand insurance. We look at different options. Everyone in this room has different needs when it comes to how your insurance should be set up. Every one of you has different challenges that you're going to face. So that's why an independent is good. We have multiple tools and multiple options for multiple scenarios. And that's what we do. In addition, independent agents work with companies that come and advertise to us. We're able to take advantage of the market, much like you would have a financial advisor who's able to say, hey, let's do this now, let's do this now. The insurance marketplace is constantly changing. Those of you who've gotten renewal bills in the past couple of years realize that, right? But it continues to change. Companies come in and out of market. We had a company that sent us to Scotland a few years ago. They are now going out of business. So the insurance market is not a static market. If you've been in the same place for 20 years, you're not doing yourself any favors. Unless you've been with an independent agent for 20 years, but we've only been around for 14, so do that math. Why is insurance so expensive right now? That's the big question that everybody's got, okay? There's a lot of reasons. Everyone knows inflation is up. Cost of goods, cost of lumber, cost of car parts, availability of car parts. Availability and cost of labor has gone up. Insurance companies have to adjust to that. Insurance companies cannot adjust as quickly as a grocery store can. There is no going and changing the price on the shelf. There are state filings. There are studies that are made to make sure it's appropriate and so on. So insurance rates are always a couple years behind what's going on in the market in general, because they have to catch up, they have to see what's happening. Insurance companies don't just have a big pool of money that they pay you out from. They have to buy reinsurance. Insurance companies are in the risk transfer business. They transfer some of their risk to a reinsurance company. Over the past 2 years, the reinsurance market has been cut quite a bit. The reinsurance companies have not been selling as much insurance. They have not been open to places like Florida, California. They're pulling out. As companies pull out, it's because reinsurance companies don't want to be in those states either. Insurance companies are suffering, and so they cannot write as much as they normally would. Here in North Texas, it is as specific as zip codes where they will and will not write. And so when you get to a state like Florida that has sucked out a bunch of money from the insurance pools and reinsurance, it becomes harder here. We're rapidly becoming the third coast. Florida, California, and Texas. The reason that Texas is becoming the third coast is mostly because of our growth. We are growing like all of us live here, we know it, right? You see it in traffic, you see it in new houses going up. So with that growth, statistics are changing. With that growth, you have a house or a field full of houses where there were just grass before. And every one of those houses gets hit by a hailstorm, and then they get paid out. And so that's changing the profile of what's happening here in North Texas. So there's less insurance available. When claims happen, they're more expensive and more often because of what's going on. Used cars, and I know that everyone in this room is watching the car market all the time. I know Bruce just got a hell of a deal on a GT3, but While the special cars are soft, normal cars have not softened up quite as much. So the cost of cars is higher. The cost to replace a car, to repair a car is much higher. And that is a challenge when it comes to what they're going to pay out. A car that they may not have had to pay out a couple of years ago, now they have to, and it's more expensive. It is less than it was right after the pandemic when things went crazy, but the market is still up historically from what it was. In addition, one of the big challenges we have are the frequency and severity of accidents. I'm going to warn every one of you, not just the ones that are my clients. When you drive down Marsh, that second stoplight, I think it's Frankfurt, be careful. People run that turn all the time. And that's what's happening all the time. When the economy goes bad, insurance companies show us the statistics that accidents go up. And the economy's not necessarily bad, but it's weird. Okay, things have changed since the pandemic. We're in a post-pandemic era, and people are living differently than they used to. The accidents are happening more often, and they're more severe. How many of you have been passed on the right by a car with a spare and a paper plate? That's a problem, right? And that's what's going on, because there are people who are not carrying their financial responsibility, and so your uninsured motorist has to do that. And that's part of what's the challenge with rates, right? And accidents are more expensive. You were telling me about your minor fender bender. Bumper covers cracked, not a big deal. You know how expensive those sensors are on both ends of a car? And even low dollar cars have sensors on both ends now. My wife's, I would say crappy, but she's gonna watch this video. My wife's little Subaru has radar on it and adaptive cruise control. It was a $35,000 car. So all these inexpensive cars are very expensive to repair. Very expensive. Even a minor thing can cost, what was yours, 6 or 8?
12.
$12,000 for a minor fender bender that cracked the covers and broke the sensors.
Front and rear.
Front and rear. That's expensive, and that happens. And here's the other thing, is that when you're driving your Porsche, or your other fancy cars, I don't know all of you, when you're driving your Porsche, you must all be millionaires, right? Because that's what the lawyers think. I was hit by a Porsche, payday. Did you know that there are actually hedge funds that invest in claims in order to maximize the people's claims and get a return on it? Those things are what's driving your rates, because the insurance companies just can't keep up. They cannot be reasonable when they're being beaten up because someone's suing for whatever for a minor fender bender because they happen to be in the right financial bracket, right? Everything has changed in the world. Insurance rates have changed as well, and this is part of the reason why. The time to get things done was a big problem for a while. So most people have 30 days rental car on their policy. So you have rental for 30 days. The insurance companies had to total cars because parts were not available. So a car may have been totaled because they only had 30 days to put a guy in a car, and they couldn't wait 60 days for that bumper to show up. Because you had to wait to bring your car in as well, right?
3 months.
3 months. And so you have multiple cars, so not so much a problem for you. But for Joe one car, that's a problem. Because he's got to have a car to get to work, and if his car is sitting at the shop and the insurance company is paying that storage, the insurance company is paying to keep him in a rental car longer than the contract says, that's a problem, and it's very expensive. And so those things are what have contributed to rates being so high lately. In addition, it's just statistics, as I said. Our city, North Texas in general, is changing. We have a lot of people moving here. They're bringing their bad driving habits from other places. They're getting lost and having accidents as a result because they're overcorrecting, right? And that's a challenge when it comes to rates. You've all driven in different cities, and I'm sure that every one of you has said, man, those people in Kansas City or Cleveland or whatever, they're nuts. It's just that you're not familiar with their driving style in that city, right? So when people are moving here, they're not familiar with how we drive in Dallas. They're not aware that George Bush is 100% F1 track, right? And so that is the challenge when it comes to more claims. And claims are more severe. Hospital prices are up. Costs on everything are up, and that's why insurance rates are up. So let me see here. But we also have more storms. Weather incidences are more severe. We see more of them, whether you're a climate change denier or not. It is what it is, right? And so those are challenges as well. We've got more storms, we've got bigger challenges. I saw this happen in Colorado. When we started this business, I won't say Colorado was the Wild West, not settled, but it wasn't like it is now. We've watched it grow over the past 14 years, and as it's grown, they have had more challenges like we've had with hail, wildfire. We don't have that, thank goodness. But with those things, we've watched Colorado's rates change in real time. Whereas in North Texas, we've always been high, and we've just really seen this pinch, big pinch over the past couple of years. But we watched all this happen in Colorado. As population changes, statistics change. As population changes, accidents increase, claims increase, okay? I'm gonna mostly speak to auto insurance, but the same things apply to home insurance in a lot of ways. Now, you're not gonna run anybody over with your home, but claims are still up in home insurance. Insurance is for disasters, and a lot of people don't treat it that way. That's one of the challenges we have here. I once was at a gas station here in Texas, and there was a guy, like the Beverly Hillbillies, just a U-Haul trailer just covered with stuff. And I said, hey, welcome to Dallas. Why are you here? He goes, oh, a lot of insurance in Dallas. I don't know exactly what he meant, but I don't think he was here to work in the industry, right? So what can you do about insurance rates being high? It's easy. Don't buy anything. Don't have children. Okay? Don't go anywhere, and don't do anything. Don't file. Well, that's presuming you're going to do that. But really, don't have kids. Don't get old, right? I had this discussion with my father-in-law, who just turned 88, and he should stop driving, and we've had this discussion, but he complains every time. Why is my insurance so expensive? Because the statistics on 80-year-olds are not good, right? Most of them are not like Jim. Most of them are running into everything. And I'll admit that Jim rounds his car all the time. So he's paying more because of what he has and partially his age. So you can't do that. You can't not have stuff. You're a bunch of Porsche guys, I know that. You can't not have kids, probably too late for most of you, right? And certainly you're going to get old. So what can you really do? A couple things, okay? Figure out how much risk you're willing to take on. That's really the key. How high are your deductibles? How much do you need all that coverage? If you're not a person who's going to make claims, do you have to have every coverage with a low deductible? We have a client who carries a $500 deductible on her home. You can't even get it anymore, but she's been with them forever. We did a renewal review with her this week and talked to her about that, and we said, that's an easy one. And her first thing was, why is it so expensive? And we said, well, this is unusual and rather expensive. And she said, well, if I raise it, I'll have to pay more at claims time. So don't complain about what it costs up front, right? Understand the amount of risk that you're willing to take on and do that accordingly. If someone sent in a question that, my cars that I don't drive wouldn't affect me if they vaporize, that don't have insurance on. But don't complain when your house burns down, because they won't be covered, right? So it's how much risk are you willing to take on? That's one of the first things. Get closer to fire. Again, it's coverage. When insurance on homes started, it was fire only. And it was literally, you paid a subscription to the local fire department so that they would come put out the fire. That was insurance. And so it's not that I'm going to suggest that you get down to fire only, but you decide how much coverage do you really want to invest in. I love coverage. It's smart. It's pennies on the dollar compared to what you're going to get paid, but you don't have to have all of it. You should be smart, and that's what working with a good agent is about. We're not going to let you shoot yourself in the foot, but we can talk about options. Where are you willing to take that risk on? What are you willing to change in the way that you're looking at your insurance? Really, insurance is for disasters. That's how you should treat it, and if it's not a disaster for you, you shouldn't make a claim. Someone said, don't make a claim. That's true. But you have insurance. At some point, you're going to have to make a claim. Make sure it's a disaster. If you carry $0 glass deductibles, make sure that's worth it to you. Because if you're not a person who gets chips on their windshield, or you're not a person that particularly worries about it, why is that important to you? Either pay to replace your windshield, and I know they're expensive now, right? But decide that you're going to replace it, or have that $0 glass, knowing that when you make that claim, your insurance will increase. In today's market, if you're making multiple claims within a cycle, there's a very good chance you'll be non-renewed. So understand, insurance is there for you, but if you're leaning on it to do maintenance on your home, fix your roof, things like that, when it's not a disaster, have an awareness. The insurance companies are not keen on that anymore. Things are changing. They put all these coverages in so that you call me and go, I want apples to apples coverage. And we go, well, I can't do that. This company doesn't offer that. This company offers something they don't offer. And the insurance companies have done that on purpose so that you can't say that. You really shouldn't go in and say, I want apples to apples. You should talk to a good advisor and tell them, this is the risk I'm okay with. This is what I want to make sure I have covered. Now, how do we accomplish that? Because comparing what you've got to what's available is a sure way to make a mistake. There are a lot of insurance agents out there who say this: it costs $50 to become an insurance agent. It's taking me 20 years to gain this level of knowledge, and it's taken me many years to pass it on to my folks over there. Insurance, let me back up a little bit. Who thinks the insurance companies are out to screw you? Be honest, I love it. Everybody does a little bit, right? Everybody thinks that in some way I'm gonna get screwed. I'll tell you right now how they're screwing you. They have been putting commercials on television for 20 years or more that say it has to be cheaper and faster. Is that how you make every decision? Why would you make a decision about how to protect your largest assets, your most important, everything you own, and the two parameters are cheaper and faster, and that's how the insurance companies have gotten you. How does it get cheaper? They remove coverage. That's what it looks like. It's less coverage. Now, you can move around, and we'll talk about that, but in general, if you're just looking at, is it cheaper than what I've got now? You're probably shooting yourself in the foot in some way, right? Talk to an agent. Sometimes it will be, sometimes it won't be, but my guys have to have discussions that what you have, I don't care if I can get it cheaper, I wouldn't write that policy in the first place. And that's really what you've got to understand. They have been conditioning you, it's got to be faster, cheaper, faster, cheaper. If that's how you make every decision, right on, call Geico. If it's not, call a professional and set that part aside. Cost should always be a consideration. I'm not saying walk in here with a blank check and, Jason, whatever, let's do it. That's not smart either. But it's avoiding that trap of if it's not cheaper, I'm not even going to entertain it. Because you get more coverage for more money. So in general, here's another thing that you can do to protect yourself. Really, you need to protect your insurance score. You can't see it like your credit score. You can't reach out to somebody and get that number, but it is a thing. Your insurance score is based on what kind of coverage you carry. Are you rocking state minimums? Bad score. How long have you been with a company? You shouldn't really move companies any earlier than 3 years. There may be extenuating circumstances. If your company goes from 5,000 to 10,000, you should shop, but they may just be adjusting to market rates. And in that case, you can, but the rule of thumb is that you should probably stay in the same place for about 3 years. It increases your insurance score. Pay your bills, I don't think it's a problem in here, but pay your bills and things like that. Your insurance score does have something to do with credit, but it's not the heaviest part. It's how much you buy into the insurance company's game. How much do you follow the rules that you don't know? That's what a good agent's for, right? Let's see here. So here is another way that you can save money every time. Try to be with one agent. There are people in this room, I'm sure of it, who have personal policies with multiple agents. That is probably the worst decision you can make. If your agent doesn't understand your entire profile, then you're really not getting the best value. Mixing it up, insurance is not where you want to diversify, I promise. Because the more you have with an insurance company, the more valuable you are to the insurance company. If you're a one policy, I just want to do my home, you're not going to get the best value, right? It's just not. This is not the way it works. So if you're with multiple agents, don't do that. Fix it. Get with one agent, work with one agent, and let that agent guide you through this very increasingly complicated system that you're required to do without any knowledge. That's the biggest thing. Now, if you have commercial and personal, you can split that up. We do some commercial, but only in a very narrow market. We'll only do a couple things. So I wouldn't say, hey, come to the Phoenix for everything unless you fit that market. But if you have a commercial specialist, totally okay. I would suggest that you have a personal specialist as well, someone who understands all your risks, because you absolutely, there are ways to bundle things, but there are also ways to mix it up so that it's covered correctly and cheaper with different options. Again, that's where that independent agent comes in my opinion. Okay. Let's see. Maintain high limits. Okay. High limits are important. We see back in the early crypto days, we had a lot of 20-year-olds who call us and go, hey, got my first Lamborghini. I'm on Progressive with state minimum liability. So if you maintain high liability limits, you get better rates. In fact, when we're quoting people, if they're coming into the agency sometimes with, say, 50, 100 on liability, and we bump that number to 100, 300, it's actually cheaper in the quote. So maintaining high limits, that's the most important. And when I say high limits, I'm talking about your liability side of things. The insurance company wants you to protect your liability because that's where the big money is. It's not in replacing your cars, it's in liability. It's in those lawsuits, it's in those hedge funds. So if you maintain high liability limits, you're going to be better off. Every time you're going to have a better insurance score and you're going to have a better experience, period. Okay? Even more than that, maintain a relationship with your policy. In our agency, we do an annual renewal review. We contact everyone. We give them the opportunity to sit down with us, with their account manager, for half an hour to go over to make sure everything is still written correctly, make sure that you're not missing anything, to compare it to what's available in the wider market. We probably get a little better than 50% take up on that. So many people set their insurance and just forget it. And that's what the insurance companies are counting on. Insurance is complicated, it's expensive, and you don't get anything more for it than an ID card on the surface. In the end, though, you get a hell of a lot more than that. Maintaining that relationship with your policy, asking, is it still appropriate? Explaining to them, hey, I got this. How does this fit into my policy? We do a lot of hot rod guys, and I'm shocked that we'll do a review and the guy will say, oh yeah, I bought 2 more cars this year. And so maintain that relationship. If the only relationship you have with your insurance policy is the bill, again, you're being screwed by the insurance company. Make sure that you understand what you're covering. Make sure that what that bill is for, you understand it. Okay? Let's talk about some basics on coverage. I'll give you just a broad insurance knowledge. So insurance and auto policy. We'll talk a little bit at home when it comes to Q&As. I'm sure you guys have questions. But when it comes to an insurance policy, there are some key components to it. You have your liability part of it. And when I say high limits, that's what I'm talking about. The minimum limits you should carry are 100, 300, 100. What those numbers mean is $100,000 in bodily injury per accident, up to, or per person, up to 300 per accident, and then $100,000 in property damage. I'm a bigger fan of a combined single limit, which is, think of those as 3 buckets. One person, 100, up to 300, and then 100 period for property. You can do a combined single limit and do like a $500,000 combined single limit, and you've got one big bucket of money for whatever happens. You should also carry an umbrella. That's excess liability. So if you have 100, 300 and you get into an accident and someone decides to sue you because you were in your fancy Porsche, you have an extra $1 million that costs you a couple $100 a year to protect yourself. Again, playing the insurance company's game and protecting your assets. Cheap, 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 cheap. In general, unless you like robbing, crashing everything, and it's expensive. Next, you've got uninsured, underinsured motorists. We actually talked to somebody this week who wanted to remove his uninsured, underinsured motorist because it was expensive, and it wasn't. But that's a silly way to save money, in my opinion. You're more likely to be in an uninsured motorist accident than you are to crash yourself. I assume that most of you people who drive these high-performance cars know what you're doing, right? You've been driving, you know what you're up to. So the people you have to be worried about is that guy with the paper plate who's going to hit you because he doesn't have insurance. And maintaining high limits of uninsured, underinsured motorists is just smart. You have a lower deductible for your property, and it's automatically not at fault. You can cover your car with your collision coverage, but then you're in an at-fault situation. It can be interpreted that way, right? It depends on how that works. You have PIP or MedPay. So PIP and MedPay, they cover your body. I like PIP better. Generally, some companies go more than 25 now, Jason, yeah? So generally the floor is about $2,500. I think some companies will do $10,000 or $15,000. PIP is a fantastic coverage because if you're in my car and I get into an accident, my PIP will pay for you. If you're on a bicycle and you get hit by a car, your PIP can be claimed. PIP is a really good coverage. Again, when you claim it, it's going to be a challenge finding new insurance because companies don't love to pay it out, but it exists for a reason. Just in general, when it comes to deductibles, my opinion is that you should carry a high deductible because if $1,000 isn't going to put you on the street, don't claim anything less than $1,000. And I would even advise you that if you have a $3,000 accident, unless it's going to be a big problem, you should pay it yourself. Don't make small claims. So having a low deductible is going to encourage you to make small claims, right? That's just the way it works. When it's only $250 you got to pay out of your pocket, well, I'll claim it. Who cares, right? That's how the rates go up. Collision. Same thing, carry a high deductible as you can. The only exception to a high deductible is, in my opinion, comprehensive. If you have a car that lives outside, or if you have a car that's your everyday that's a soft top, whether that's a Jeep or a cab, I would carry a lower deductible on that one because you want to put your chips where they go, right? Someone cuts your top, that's $5,000. right? If you get into a hail claim, you want to maximize the payout on that because you're going to claim it or not, right? But with that lower deductible, you're putting your chips where you have most risk, right? You're willing to pay up front for that so that you get better value on the back end. Again, if you're making a claim, it's going to affect your rates. But that's the only place I've ever advised a low deductible is comprehensive if the car, in a couple of narrow situations. I don't think I even do that anymore, even though I drive convertibles and park cars outside. But that's up to you with how you want to do that. That would be the advice I make. And then you've got towing and roadside assistance, and these are the basics. Other policies have other things. Towing and roadside is worthwhile. That's probably I drive all 20-year-old cars. That's probably the one I use the most. But towing and roadside is a worthwhile coverage. You can be smarter than me and get AAA. AAA for roadside is worthwhile because it doesn't end up on your claims record. If you make a towing claim, we've seen it. Some of the funniest claims that we see are when I had a friend from high school who repaired a chip in his windshield every single year. That guy couldn't find insurance after a while because no one wanted to cover him. I'm probably going to bump up against challenges because I've used my towing several times this year. And so that's going to be a challenge. AAA can avoid that. Have it for emergencies. I would carry it anyway because sometimes you're in a place where AAA can't find somebody and the insurance company can't. So good insurance against your insurance, right? But if you can lean towards AAA for roadside, it's not going to report. It's going to be a lot better for you in the long run. And so that's the basic coverages we talk about. Now let's talk about a couple different ways to cover your cars. So there are all ranges of types of Porsches in this room. Michael has two kinds. He's got the classic kind, he's got the everyday kind. So specialty policies are built for specialty cars. You have an air-cooled car, it's on Hagerty, I assume, right? So when you come to a classic car, and I know that all of our cars are great and special, but some of them are not necessarily classics. But when it comes to a classic car, you're going to want to be with a company that has agreed value. And agreed value, let me back up. So there's a couple different ways to cover a car. Actual cash value, which is what your everyday insurance covers. It's going to cover the actual cash value of that car when it's totaled. Understand, that's not what it sells for at the dealership. It's the actual cash value. They actually back out dealership profit from your payout. But that's actual cash value. For a standard car, not a big deal. You have stated value, where you tell the company, hey, this car is worth $35,000. That's what I expect to be paid. When claims time hits, it's on you to let them know why that's worth that. Because they're going to pay the actual cash value or stated value, whichever works, right? But it's on you to figure out, to prove to them why it should be worth that. In most cases, when you have a stated value, it's going to be easy to do that. The third way is with the special companies, which is agreed value. Agreed value is you tell me, what's your car worth, Les?
Which one?
The air-cooled one.
60.
So you tell me that car is worth 60, as long as the company agrees to it, you're getting paid 60, period. Most agreed value companies come with 0 deductibles. They all have roadside on them. You're going to agree up front what it looks like. Most agreed value companies, Hagerty, Grundy, American Modern, J.C. Taylor, those kind of companies, a lot of them will allow you to work on your own car if you need to. You can always pick the shop, right? They're going to be a lot more customer oriented. They want the results that you want out of it. They're also a lot more restrictive. If you're the kind of guy who, no matter what I tell you, you're going to do your own insurance and be your own agent, then I'm going to suggest that if you have a special card, just call Hagerty. We are big Hagerty agents. I would prefer that you just call us, but just call Hagerty. Hagerty is the most flexible of all of the classic car companies. They will allow you to use it in things other than car meets. So if you end up at a pizza place or like Porsche guys do at some coffee shop, then absolutely it won't be a problem. If you end up at we're going cobbler this afternoon, if you end up at the cobbler shop, it's not going to be a problem if you have a claim there. A lot of the classic car companies will not pay out in that instance. In fact, well, they'll pay out, but then they'll cancel you. We had a client who took his 50-something Chevy, went to an afternoon car meet at some burger place, thought he'd swing by Home Depot and grab something on the way home. Car got hit in the parking lot. They paid him, but they canceled him. And the last thing you want is to be canceled by a specialty company, because then it's going to be harder to get with another specialty company. Okay? So understand the type of policy that you're buying. How does it fit your needs? What are the restrictions on it? And if you're dealing with an agent that can't tell you those things, then you're probably dealing with the wrong agent. Okay? Specialty policies are special for a reason. They're not a way to save money except at claims time, right? They'll save you money in that you're not going to be crying into your beer because they didn't pay you enough. If you're shopping classic, because I don't ever drive this car and I think it should be a classic because I want to save some money, that's not how it's intended to be used. Okay, so do understand that when it comes to classic policies. There are also companies like Chubb, Cincinnati, and some other, we call them high value carriers. They're going to also cover your cars for agreed value, but that's your everyday car. Again, you're paying for that. Understand that when you pay your insurance bill, you are paying for what happens at claim time. If you're focused on how cheap it has to be right now, do not be surprised if at claims time it is more work than you wanted. Okay? Work with a good agent who can tell you, here's the challenges with these things. Here's the challenge with this carrier. This might not fit you because you drive your air-cooled all the time, right? So let's not put you with a Grundy who says, nope, only these things. Let's make sure you're with Hagerty, who is a lot more flexible about things. And this is not a Hagerty commercial. It's just understanding there are different companies that have different purposes. If you only polish them, Grundy's where it's at. Really, I promise. If you're really going to drive it, Grundy's fine, but you better know where you're driving it. Understand your mileage. There are a lot of companies that do track miles. There are classic car companies where you're buying by miles, basically. And that's fine. How much do you want to be a mileage auditor for yourself, right? How much do you want to take the chance that you didn't report your mileage correctly and now something's gone wrong? In today's market, I have seen more insurance companies deny claims and rescind coverage than I have in my entire 20 years. If you either intentionally or by working with a bad agent are misrepresented on a policy, there is a far better chance now that you will not get paid than there was 2 years ago, 3 years ago. Because it is insurance fraud, whether you were complicit in it or not. When that agent's hooking you up, you are committing fraud. You sign off on that. And I hate to use the F word, but it's what the companies will use, right? So understand, you need to know who you're working with. You need to know, they need to know their policies, and you need to make sure it's correct. That's really the key. Again though, if it's gotta be fast and cheaper, how much checking are you doing? How much knowledge are you gaining from the person you're working with, right? So I had some fun questions, and then we'll go into Q&A, so hang on for me here. Okay, so I had someone ask me about a 2009 Cayenne GTS, and the three companies said it's not a classic. Who was that? Okay, special car. Cayennes are tough, okay? In general, if you're calling them directly, they're not interested. If you want that to be on a specialty policy, if you use it like a specialty car. If you're driving it to work, the only way to get agreed value is to pay up for a Chubb or whatever. Okay, if you're underinsured because it's actual cash value, and you are a little bit, I get it, right? But if you're underinsured and you're driving it every day, paying more to go to a Chubb or someone like that is going to be better. If it is truly your weekend car show car, then Hagerty will do it. We can make that happen. Get with Jason, Jenny, or by the way, one of my other advisors showed up. Jenny's back there. So get with someone. When you've got an agent who has pull, like we do, we can make things happen. Hagerty will accept a Cayenne. We have to make a case for it. It's on a case-by-case basis, right?
I called Hagerty direct.
They don't want you because you're trying to save money on a car that you can see in the mall. No offense, but that's what it is, right? We also have people call us with brand new F-150s. I promise, it's special, but you can see it in the parking lot of any Home Depot any day. So Hagerty Direct doesn't want to deal with you. They'll do it for us. So get with an agent who does that. That's another thing that you need to understand, is that agents, especially independent agents, have pull. We are one of the largest Safeco agencies in Dallas. If you're with Safeco, and they love us, if you're with Safeco with us and things aren't going well, I have power. You have one policy, I have thousands. That's the value in having a good agent. In doing it yourself, they don't want you. They want us. So we can make it happen, and that's how you make that happen. But if you have a car that's special, working with a specialist agent, that's special but modern, working with a specialist agent can make it work. In general, four-doors aren't okay. Modern four-doors are tough, but they do recognize Cayennes. And so that's one way you can do it. That's special enough, we probably could make it happen. So get with one of the guys, so that's what you can do. But again, work with a specialist. If your agent says, I don't know, are you with the right agent? 1974 914. Who's that? Are you here? Okay, well, he'll watch the video, I hope. So his questions, some companies limit, he's about to finish his car, He's ready to get on the road. He wants to understand his insurance. A 914 is absolutely a classic car. It'll fit with anything. If you're daily driving a 914, right on to you, but we'll still work with it, right? Some companies limit use to only car activities. I'd hate to have a claim denied because I went to the car to the pizza shop. How is this monitored? When you make the claim, that's where it is, like I talked about, right? If you're someone who's going to do that, you don't need to be with one of those restrictive companies. A good agent will tell you who that is. Tell them how you use the car. There's an old meme on, there's memes on Facebook, what the insurance company thinks I drive, what I really drive. That's the wrong way to approach insurance. If the insurance company thinks you drive this, that's what you're going to be paid on. So if you want to protect these what you really drive, make sure that the insurance agent knows what you do, just like your usage. Again, if that car is really how you use it, talk to a good agent and they'll come with a solution for you, right? So you also had questions about specific companies. American Collectors, USAA directs their clients to American Collectors. We don't sell American Collectors for a reason, mostly leadership reasons. Not every company is created equal, okay? The reason USAA recommends American Collectors is because American Collectors pays them to do that. That's it. The only way Hagerty pays me is in commission and napkins, right? So understand that when you're working with someone like that, but at the same time, if you're calling American Collectors direct, you're your own agent. What questions do you know to ask? Do you understand what kind of policy it is? Have you read the policy language? Because an American Collectors agent is a captive agent. That's what he has to sell, okay? American Modern is the other one that he asked about. Are they a good company? They were. They were. I was a very big American Modern agent. So, and I hate to say the name, but there's another big agent who does specialty stuff here in Dallas. They shut us both down recently because we wrote too much business with them. Is that how you want to be corrected or protected by a company that's willing to bail on you because there's just too much business, because someone's too good at using their product they built? So I don't sell American Modern anymore. If you want to do American Modern, by all means do that, but I wouldn't recommend it because I don't love American Modern. They're not really a good agency partner. When it came to claims, American Modern was okay, but there was a lot more back and forth than a lot of people would want in their special car. That's my opinion and my knowledge on American Modern. Do some companies have an age limit on the driver? No. Young, yes. A lot of companies won't put your 16-year-old on your special car. When it comes to regular insurance, no. But when it comes to classic insurance, Hagerty is one of the few that will allow young drivers, not by themselves. You have to have an anchored dad, right? But in general, no, there's no age limit except for classic policies, and generally it's around 18 is when it starts, right? But there is an upper age limit. They're not going to tell you, we're not going to insure you more because you're 81. The bills will just continue to get higher. Insurance companies don't have to say no. They can just keep raising the bills, and if you pay them, they win, right? But I haven't found anybody that says we won't insure this person because they're too old, okay? Which companies have user-friendly claims processing and which do not? That's a big, broad question. We only work with companies that do. If I write you a policy, Jason, I'm not going to write you a policy, but Jason, Brett, or Jenny's going to write you a policy. Every one of us likes to sleep well at night. So I'm not going to write you a policy that, to my knowledge, is going to be a hassle at claims time, because that's what you're paying for, right? We don't represent companies that are a hassle at claim time. We've stopped writing companies that are a hassle at claim time. If it's too much, I'll give you one. There's humans involved, right? You're having a bad time because you got Joe the bad adjuster. I'll give him a pass, right? But if I hear multiple times, this company sucks, I hate working with these people, we're going to talk to leadership because, again, thousands of policies. I produce insurance. And if it doesn't change, if they don't change things, we will exit that market ourselves. So yes, there are companies that are better. When it comes to classic, again, I'm going to tell you, if you refuse to deal with an insurance agent, you're not going to talk to one of the nice folks in the corner there, call Hagerty. That's the only one you call. If they'll take your car, great. If not, there you go, right? That's going to be the best and most seamless claims process, period. The others won't be bad, it just will be more work. You get what you pay for. Chubb, the same thing. If you want to have the most seamless claims experience, if you are qualified for Chubb, you should pay that money. It's going to be the best. The best. So when it comes to insurance, again, cheaper and faster is not always better. Because cheaper means that you're sacrificing something somewhere. Not always, but sometimes it does, right?
Hey, Justin, on that one, there was one other question.
Yeah.
Do all insurers let, that same group that you just do all insurers let the owner select the shop for repair?
Yes, 100%. You can do that.
State law, isn't it?
State law in Texas, you 100% can. At the same time, that doesn't mean that the insurance company is going to pay whatever made-up rate your shop decides they're going to charge the insurance company. They're going to pay a standardized rate within reason, right? If your shop is 110 and the standard is 100, yeah, they'll probably work with that. If your shop is 300 and the standard is 100, you're going to have challenges. So just understand, and we've seen this before. The insurance company does an estimate, and it all gets done, and it's 4 times what it is. They're not going to pay that. They're not going to make it up. So if you have a shop that you like, great. Ask them if they've worked with insurance companies before. A lot of shops don't care for insurance companies because their numbers are kind of made up, and they won't work with them, right? And it's really the case, right? Now, there is no standard, so it kind of comes down to the company, but you can use whatever you want. I would always recommend, if they're reasonable, if you think they're a reasonable company, work with who the insurance company recommends, because they're going to guarantee their work. They will not guarantee Joe Schmo's work. Okay? Did I get that one? Okay. Let me see here. Oh, this one was asking to video it. Oh, there we go. Okay.
Question along claims.
Okay, go ahead.
Original parts.
Good question.
You know, I have a Porsche, but I have other cars as well. And if your car's fairly new, they will, but if it's outside a certain area,
Actually, no. If it's fairly new, they won't. So there's only one company, just Safeco right now?
What's that?
OEM? Is it just 2? Who's the other one? Hartford. So we have 2 companies where you can choose, again, to pay to have OEM parts coverage. They will replace it with a brand new factory part. It costs more, but you can get it. Not every company offers it. They are not required to do it. In fact, we've heard from a lot of companies now that where before they were going to just replace your bumper cover, now they'll try to repair it. So if, again, it's all in what level you want. If you want OEM, make sure that you're with a company that does OEM. Not every company does it. In fact, most don't. So talk to a good agent. Yes?
I just had an experience with my Cayenne, and talking with the body shop, had to be Stewart's, by the way. But anyway, the insurance company will not approve any parts OME on that vehicle repair. If there was a one made by Joe Bob, if Joe Bob made the pump bumper cover, you're going to get it. If you don't, if you want the difference, please pay it.
Exactly. So you can. So if you want OEM, you can tell the shop,
Yeah.
I'll pay the difference. Right.
Well, here's what I found out. There was only one part on my 2019 Cayenne that had a Joe Bob part,
Really.
and it cost me $200 to get a whole new part.
Right.
And that
But
was a simple thing that I'm Stuart, I paid.
but you can endorse it on the right policy. Jason, can you make up a number like what the difference would be for an OEM endorsement?
I mean, just for the endorsement, I mean, it's less than $100.
Yeah. So overall policy is one thing, but
And then electric policies, when you get the agreed value, you have that option to get those over.
absolutely. But when it comes to everyday type cars and your Cayenne or whatever, make sure you're with a company that allows OEM if that's important to you. Talk to the people that you're talking with and make sure they understand that that's what you want, because it is an option, not expensive, but make sure you pay it up front so you don't have to pay $200 on the back end. Right? Okay. This one was about, so I had a bunch of questions about track stuff. And the easy answer is no. But I'll go into detail on them, okay? If you drive your own car at a high performance driving session or drive it on a track day, how do you make sure you're adequately insured? You call Jason, Brett, or Jenny and talk to them about a track policy. There are annual policies available. They are not complete, okay? So they're going to be capped. Liability, you're not gonna get $1 million in liability, you'll get, I don't know, 100,000, right? If you have a $300,000 car, they're gonna cap the value they're gonna pay on that car. They are available, they are not cheap. If it's a thing that you're serious about, it's worthwhile. Most individual track days, if you go to a track day at COTA, right, you can generally buy a one-day policy there. But if you're a serious track guy, there are policies available. It's not quite like your regular policy, but there are policies available to cover. How does insurance work if you drive a car belonging to the organization conducting a high-performance track day? I assume the insurance offer would be very comprehensive, but what is typical? I'm assuming my insurance carrier would be out of the picture, but what about liability? Your insurance carrier will not touch it. Liability, you kill somebody, that's on you. It doesn't matter if you're doing it. And what's Eagles Canyon is the one MSR, Motorsport Ranch. I went up there to talk to that guy. That's a racetrack. We're all real about that, right? He wouldn't use the word racetrack. He says, well, my liability won't let me say it. Bullshit. Everybody knows what that is, okay? There are no semantics. I was in a driving school. You were on a racetrack doing racetrack stuff. So there's no way to cheat the system and get your insurance to pay. The minute you drive under a track, they're out. No matter what you call it, they're out. So liability, again, available through racing policies, something we sell. If that's important to you, talk to one of our agents about it. It can be done. Again, it's another expense in the hobby that you're pursuing, right? And they do have liability. It's going to be capped always. You're never going to get $1 million liability for going on the track. You're never going to get a $300,000 car covered unless you're a NASCAR team, right? But you're not going to get that. There's going to be caps on those things. How does mileage driven affect premiums? Good question. A couple different ways. If you drive less, your rates will be less. You will have to report it. And I'm talking general policies here, classic policies. In some classic policies, you can buy $2,500, $5,000, whatever, right? When it comes to regular everyday insurance, mileage does make a difference. If you're driving not many miles, make sure your agent knows it, and you're gonna have to track it with the insurance company, but there are discounts for that. If you're driving a lot of miles, if you're not being tracked by the insurance company, then it's less important. You can drive about as many as you want, it's not a challenge. But with insurance companies now, the way the insurance will happen in the future is that you will be tracked. Period, okay? So mileage will affect it. Right now, you can go to Safeco. A lot of our companies offer tracking. They have different brand names for it, but it's all tracking and generally on your phone. And if you take advantage of those programs, you can save a ton of money. It doesn't track where you go, so if you're going to your girlfriend's house, they won't know it. They'll just know how fast you drive there, right? That's all it comes down to. What is it? Hard braking, hard acceleration, what are the hours? So if you're going to your girlfriend's house at 2 a.m., they won't tell your wife, but they'll still be concerned that you're out at 2 a.m., right? So understand that they're going to track you. It's all about mileage and numbers at that point. And I won't do it myself. I actually did a tracking program. The Travelers let me do it. I maxed out at needs improvement. I actually did it. I started the program the day I left for Palooza. So I completely screwed my stats on that one. But in general, if you're aware of it, most companies will do a tracking program for, I think some of them are 90 days, some of them for the life of the policy. The more you're willing to be tracked, the more your rates will be affected by it. Here's the thing that you need to understand. If you drive a Chevy, GM has an agreement with Travelers that they can just download your driving history. Tesla, that's how Tesla insurance works. It's all statistics. The good news is that's a personalized policy for you at this point. The bad news is you're kind of at the mercy of how you drive, right? So there's advantages to being tracked and advantages to not being tracked. In most cases though, if you're doing regular auto insurance, I highly recommend it because it's going to be a discount just for doing it. And most companies don't penalize for poor driving. They just won't give you an additional discount. So it can be worthwhile. Again, talk to your agent, find out how their program works, whether it works for you or not.
Can you sort of define low mileage?
Low mileage, 5,000. Below 5,000 is low mileage, okay? And so again, you're gonna have to report to them. They'll be asking you for proof of it, but it is a way to do it. If you really aren't driving very much, you can pay less accordingly, right? How does a state's no fault status affect insurance, premiums, coverage, et cetera? I don't even know how to answer that question because insurance is insurance and it's different in every state. It's different here in California, it's different in Michigan, it's different everywhere. I don't know anything about no fault states. We don't write there. I don't know anything about it. So if you are in a no fault state, make sure you carry the max coverage. Talk to an agent who's in that state and understands it. Because no fault is a different animal. You're paying for your own things. Make sure that what risk are you taking on? Understand that. States affect rates in a million ways. Texas is we're pretty wide open. California, has, California's government has screwed their citizens because they would not allow rate changes for many years because they thought the insurance companies were just lying to them about how much they need to charge. And so now so many companies have pulled out. They allowed rate changes and now it's gone absolutely bonkers over there. So how the state can affect you is that if they're not working really behind the scenes to advocate for you, not to stop the insurance companies from doing what they need to do, but to advocate to make sure good companies are coming in and so on, they can absolutely affect what you pay. Okay, and what is next? More questions. Does liability insurance follow, this is James, does liability insurance follow the driver or the car? Yes, it follows both. Okay, so if I toss you my keys, my liability will pay, your liability will also pay, but I will end up with an at-fault accident on my record. So that's how that works. So as long as everybody has insurance, it'll work out. But in the end, your liability can be painted onto James if you loan him your keys. At some net worth, do you no longer need car insurance? If I lost my undriven cars, it would not impact our lifestyle at all. It's not about net worth, it's about the amount of risk you're willing to take on. Okay, and someone also asked about self-insurance, and I'll address that in just a minute. But it's not about how much you have, it's about how much risk do you want to take on. If you truly do not drive those cars, your biggest risk is fire. It's up to you to decide whether that's something you're going to put your chips on or not. That being said, there are policies that will just give you comprehensive if you truly don't drive them. Jason and I were once driving through Clarendon, Texas in the milk truck. We stopped for lunch and the old guy says, "Hey, can you come back to my diesel shop and let me take some pictures of your truck? I used to drive one when I was young." "Absolutely." "You want to see my car collection?" he says. "Sure, let's check it out." We'll hop in a little golf cart, drive up to his metal building out there in Clarendon, Texas, and it's full of classic American iron. I said, "Man, it's the law. I got to ask you, who does your insurance here?" And he says, "Nobody. I don't need insurance. I don't drive them." I said, "This is Clarendon, Texas. You've never had a tornado here?" "Oh, shit." He called Jason. We now do insurance on those. So it's not about net worth. It's about what are you willing to lose. If you're willing to toss those keys, it doesn't matter to me whether you insure it. If you don't have loans, like I said, don't have stuff. Certainly don't have loans. If you own all those cars outright, no one's making you insure them. But there are options so that you don't have to pay individual policies on each car. You can do a collection policy. When you get to a collection policy, you have one blanket liability that covers all the cars, so you're not paying individually like you do on your regular cars. You have a blanket, and then you can do comprehensive on cars and things like that. So there are options. You don't have to cover everything you own unless someone's telling you, I got a loan on this, I got to do it. Or if you're going to drive it on the state, okay, drive it on the highway. Thank you, James. Excellent questions. Let's see here. Okay, this is my favorite one. Does bundling home and auto insurance make a difference in overall cost? Absolutely. So and it's not just home and auto insurance, it's everything. Not every company will do all of it, but there are companies that will do home, auto, boat, motorcycle, umbrella. The more things you have with one company, the more combination discounts you get, and it will absolutely save you money. But it can save you money a couple different ways too. We have companies that will do a single deductible. So let's say we have a disaster, your house burns down, your cars all go with it. You're not going to pay individual deductibles. Significant. The companies want that. It's less risk spread out. Like I said, insurance companies don't want you diversifying. They want everything. They want to know who you are. They want to understand your risk and understand who you are. The more you put with them, the better off you'll be every time. That being said, not every company offers classic. Like Safeco will do classic. If you're someone who has home, auto, and a classic car, you might end up with all three things with Safeco. At the same time though, Safeco's classic is one of those restrictive classic covers. So if you're a guy who drives and goes to pizza and coffee as much as Les does, you might not bundle that classic with Safeco. Again, talk to the agent, tell them how you use it, tell them what your goals are, okay? Does longevity with a carrier make a difference? Absolutely. As I said earlier, 3 years. That's what they want you to stay. It takes 3 years for an insurance carrier to turn profit on you if you don't make a claim. If you make a claim, it changes. But within those 3 years, that's what they want because then you're profitable. I know it doesn't seem like if you're not making claims, why should it cost them anything? They employ a lot of people. You've seen that the Liberty Mutual building on George Bush there, is that the tollway? A lot of people in there, a lot of salary. So it takes them years to get profitable. 3 years is where you should be. Really, I think that you should check every 5 years, what does the market look like? Because it does change. If you have, with us, we're going to check it every year just to make sure you're still in the right place. And if you're there 3 years, though, that's how you're going to maximize your insurance score. If you're someplace for 20 years, not smart at all. Things change. The world is, I'll ask a question rather than telling you. Is the world different than it was 20 years ago? Yeah, you should probably evaluate your insurance more often than that, okay, because things change. Does claims history make a difference in cost if you switch carriers? Absolutely. All claims will affect your rate. Uninsured, not at fault, glass, towing. So anybody who says it's a not at fault claim, it shouldn't make a difference. Wrong. You have shown that you will make a claim. The insurance companies know now that you will make a claim. It affects your insurance score, it affects your rates. If you're making a lot of claims, you're not going to be able to move in today's world. If you're a guy who has a record like my friend with the windshield, or frankly me with the towing, I don't know that I'll be able to move because I'm a claims maker. If that's who you paint yourself as, then the insurance companies are not super duper interested. Insurance is for disasters. People that are claiming little things all the time, you're not going to hesitate to claim again. Every one of those claims costs a ton of money, more than what they pay you out. So if you're a claims maker, it will absolutely affect your rates. And I think that's the last one now.
How does one become
Self-insured. Oh, this is a fun one, okay? So, how do you become self-insured in the state of Texas? That's what I'm going to end with it, but I'll walk you through the process. You're going to put up a bond. You're going to file a shit ton of paperwork with the state. The bond will not be high enough to cover your liability. It won't be. The bond is low. The bond is still insurance. So if you really hate insurance companies, you're trying to avoid it, you're still buying insurance, just a different kind of not enough. So you're gonna do a bond, you're gonna file with the state, you're going to probably do it twice because every time I've had a lost title challenge, the paperwork has been wrong, so you're probably gonna file a couple times. And then when you're finished with it, you'll have put a giant red flag up to lawyers that say, this guy has a lot of money and doesn't carry enough insurance. So I'm going to take his house, because that is what will happen. There's another way to do it. Get your buddies together, form a private insurance company. It will be very expensive up front, but if you get the right buddies, it'll be cheaper in the long run. Also very, very complicated. I will take it on for you if you get the right number of buddies and you show me the checks. But I'll tell you, probably not the smartest move, because you're not going to have enough liability. It's not about covering his car. It's about paying for his lawyer when he sues your pants off, right? And here's the secret, is the insurance companies have the best accident lawyers in the world. And also, here's the other thing, if you self-insure and you go through that process, the lawyer that's suing you will also know, this guy doesn't like to spend money, he's gonna get a shittier lawyer than me. So understand exactly what you're doing with doing that. If you're avoiding insurance companies just on principle, self-insurance is not the way. For pennies on the dollar, you can buy millions of dollars worth of protection. A typical umbrella policy for $1 million in excess coverage, $1 million worth of insurance company lawyers, a couple $100 a year. Why would you want to go through all that effort to be stupid and put a red flag up and not have enough money just sitting there in order to be sued, when you could spend a couple dollars with a professional and end up better off always in the long run? When it comes to self-insurance, with just kind of to give you a rule of thumb, self-insurance for commercial insurance, it's easier, it's a lot smarter in some ways, but they won't even begin to do that until you're approaching $200,000 in insurance premium. That's what it costs, $200,000. That's what it costs for them to make it worthwhile. So think about it as an individual if that's worthwhile or not. Okay, so that's the questions I had. I'm sure that what I said brought some new questions up, so let's do it.
The concept or a diminished value, could you explain what that is and when that actually
So diminished
applies to
value
things?
is the difference between the value of your car pre-accident and the value of your car post-accident. In Texas, it's very hard to get. I've not seen many people actually accomplish it. And so it can be done. you should have had an offer prior to when you had the wreck, and then you can prove to them they're making you a lower offer. One way to do that is just periodically, I guess, stop by Carfax and see CarMax and see what they'll offer you. And then after you have the accident, stop again and see what they'll offer you, right? But diminished value is tough. There's only one state where it's really easy, Georgia. But other than that, it's kind of a battle. We've seen some of it. It's a lot less. If you've got like a Halo car, yes. On your Civic, probably not, right? But if you got your GTS and your Cayenne, you probably have a good chance of diminished value, right? If you have a base Boxster that's 20 years old, probably less so, right? It's on a case-by-case basis. It can be done. It's not easy. It's up to you to prove the difference. So, does that answer your question a little bit? Yeah. Okay. You had one.
You and I were talking a couple weeks ago about home depreciation values. It's fixed to be a real big deal in the homeowners market.
Yes.
Can you kind of elaborate that a little bit farther?
Okay, so
a lot of people don't understand what that means.
So yeah, that's an excellent question. Let me back out home insurance, okay? There's 3 different ways to value your home. What it would sell for, what they want to collect taxes on, and what it costs to replace. That's the only one that you want to insure for. Because they're not going to you're not going to throw them the keys and just go buy another house. You're going to rebuild what you've got. So you want to make sure that your house is always insured for replacement cost. The companies have calculators that will allow you to do that. What you paid doesn't matter. Is this replacement cost? Show me the calculator that you did. Okay, and that's really what you want to do. When we do a home insurance policy in our agency, we're going to ask you a ton of questions. What's the finish out like? Built-ins and so on. That's how you build that replacement cost value. The insurance companies are generally going to be more correct because they build 1 million houses a year, right? So they're going to have a pretty good idea what it's going to take to replace it, and they're generally going to treat you well. Now the challenge is that as houses are not, as things change, you may be overinsured if inflation shrinks. That's okay too. Talk to your agent, make sure that replacement cost is still in the appropriate range, because your house that was, and not yet, but probably in the next 3 years, your house that's $1 million replacement cost today might be, if things really get good, I don't know, $750 in 2 years. Make sure that you're covered for the appropriate amount. It doesn't hurt to be a little overinsured, and frankly, the difference between $1 million and $750 is probably not going to be a tremendous amount premium-wise. So it doesn't necessarily hurt, but if you want to make sure that you're only paying for what you're going to get, then keep that replacement cost top of mind. Not what it's taxed at, not what it sells for, not what your neighbor's house sells for, but what it would cost to replace your house. That's how you cover it.
Can you get replacement cost on the roof?
Depends on the company, okay? That's changing quite a bit. So roofs are the big question here in Dallas, right? Most companies now will still do replacement costs on a new roof, right? 10 years. How many years? 10 years. Up to 10 years, you'll have replacement costs on a roof. After that, it's going to be a couple different ways. There'll be a buyback for replacement costs. You can pay more, right, to get replacement costs. There'll be depreciation. Some companies will depreciate, it'll go to actual cash value. Some companies will depreciate year by year. It's on a case-by-case, company-by-company policy. So make sure you're talking to the agent, tell them what you want, know what it looks like, and know what kind of roof you've got on your house. One of the biggest challenges for everyone here that owns a home is that my neighbor got a roof, I need one too. No, you don't. But the insurance company will say, well, whatever. That's what they've done for the past 5 or 10 years, and that's why we're here. We don't license roofers in Texas. So it's a crazy, crazy thing, but that's what happens. And so when a hailstorm comes through, that's a lot of free money for dudes with a pickup.
Does it all say the deductible is going up to 2% next year?
Yep. So
Deductible going up to 2% next year?
yes, a lot of deductibles are going up to 2%. Not all, not necessarily. I think that in the next couple of years, that's what it'll look like, right? In fact, in the next couple of years, you'll see nothing but high deductibles and mostly ACV on roofs, because so many people have used it as a maintenance item rather than a disaster repair, right? There will be higher deductibles at 2%. Frankly, again, unless it's totaled, you shouldn't be making a claim on your roof. There's plenty of roofs that have been replaced that should have been repaired, right? Get with a good roofer. If you don't know a roofer, we have a friend who's a roofer, and that's hard for me to say. He's an insurance guy, but he takes me to the Masters every year, so it's okay. But you have to have one that you can trust, because there are plenty of roofers out there that will fight tooth and nail to get you a roof that you don't need. And if they're paying your deductible, understand it's illegal. What they're doing is they're cutting corners and they're boosting the numbers in the insurance company so that his rates go up so that you got a new roof, right? And that's what's happening. Who else? Go ahead, Bruce.
For watches, as I buy new watches, don't tell my wife, do I have
I don't
to,
think she likes this channel as much as the other one.
or handbags for Jackie,
Yeah, exactly.
do I have to list them individually as I buy new ones, or do I have a pool of money?
There's a couple different ways. Depends on your policy. So
Okay.
some policies will have a valuables pool. We'll cover X amount of valuables. Some policies will have individual scheduling. It depends on what you want and again, how much are you willing to take on, right, on your own risk. And it depends on the company. So I think yours are with the same company your home is with, right? But there are companies that will do specialized property outside of your home. Again, a place where you can bundle or not, depending on what you want to do. You can add them on individually. Most home policies, though, have a hard cap on the amount of unscheduled or unpaid for special things that you've got, around $5,000. So if you've got one piece at $5,000, you're okay. If you have more than that, you need to talk to your agent, or not if you don't care, like James. Talk to your agent about how much would this be to cover this. It all comes down to where are you putting your chips on the table. So yours, I don't know, talk to Jason, he'd know how yours works, but in general, when you've got a policy that is itemized, you're gonna add the individuals on.
So if I come to you for an assessment, I'm coming in blind, or you're blind to me, so do you have some kind of questionnaire
Oh yeah, it's gonna
that
be,
you can
it's-
send?
We don't send it. So your answers will lead to other questions every time.
Okay.
And the most efficient way we have to do this is you're gonna get on the phone, Jason, Jenny, or Brett. We're gonna do an exhaustive conversation with you about all the things you've got. And that's the best way. We start at 10,000 feet. So if your goal is your GTS, great. Make sure we know that. But we're gonna start at 10,000 feet and then work out what's best. There are plenty of times when Jason says, you know what? You hang on to that home policy as long as they'll send you a bill, right? But we are the ones that have to really look at it and make sure that we know all the things we know. So it's a huge assessment. We don't send it out. It's not something you can do yourself. It's not a DIY thing, because Jason has a lot of knowledge. Your answers will lead to questions.
Okay.
Okay?
What's your opinion on the insurance offered through the Porsche Club?
Okay, interesting. So I'm actually in conversations with the PCA Insurance to be appointed with them. Thank you, Patrick Arnold. But I'm talking with them. My opinion, I don't know anything about the policy. I don't ever trust a policy where you're direct with the company. Porsche is a very big company, and they're going to take care of you, I would believe, right? It's insurance. It's regulated, right? But who are you going to call if something's not going the way you want it? Right? So that's my only opinion on Porsche insurance. I don't know if they track it the way Tesla does. Here's the thing that I would be concerned about with an insurance like that. One, it's Porsche, they're a car company, not an insurance company, right? But two, is it a fixed number? The only caveat I would say is if you're going to do Porsche insurance, if it fluctuates every month, that would not be something I would buy. We've had people who come to us like, well, I'm going to go to Tesla because it's cheaper right now. But next month it's $240 because they're tracking how you drive, right? So I don't know how Porsche does it. I'll know more by the time I do the next one of these, 3 years from now. But
As far as I know, they actually have another company behind them.
no, they do.
And then they have, it's a mileage limited thing and declared value.
I don't know much about the product right now. Again, I don't like anything that doesn't involve a professional in between you and them because you're not an insurance agent, right? And so it's knowing the policy, knowing what's going on, and I just don't know enough right now to have an opinion, right?
You don't, Redless isn't a professional.
What's that?
Redless isn't a professional.
Right. So, yeah, exactly. There's a lot of, everybody know what a jailhouse lawyer is? So many people come to us with jailhouse insurance agents. It's insane because you get your knowledge from him and he doesn't know much more than you do, just what he's experienced, right? And so, again, who are you working with? A professional? Are you working with an order taker? Because Porsche will sell you insurance. That's their purpose. Is it the right insurance for you? What's that?
Pretty pricey.
Is it?
I
Yeah.
got a quote on one about turbulence.
Yeah.
Really promoted it. I said, yeah, I'm fine, no problem. They're crazy.
Yeah.
And then they don't base anything on Texas laws. That's the other thing that we look to
So,
find out.
I would, again, you can do direct insurance. You better know what you're doing. That's just my opinion as a professional.
Justin, I know you don't have a crystal ball, but just based on, we've seen on the auto side, double-digit percent increases. What's your prognosis on the future piece of that, on pieces? Uninsured motorists, like, do you expect that to keep increasing because of the factors you mentioned more
We're in
quickly?
Dallas. I expect uninsured motorists to go up. So here's kind of my take on what things look like today and what they're going to look like. So for 2 years, it has been awful. Awful. Ask these guys. Buy them a drink. You owe them that. It's been awful. Rates have been going up, double-digit increases, companies pulling out, and so on. We just got an appointment direct with Chubb. The fact that Chubb is appointing new agents is a glimmer of hope on the horizon. Okay. The fact that Porsche Insurance is talking to me, we just got a Geico appointment. I don't know how much we're going to sell, but we're going to have Geico here shortly, right? So that tells me that good things are on the horizon. We're hearing that double digits are over, right? I also had Foremost tell me for 4 years that EFT was coming in a month, so, how does that go? But I do think that we're through the worst part. We have had to ratchet up, and now we're here, whereas we were here before. I think we're probably in a better place for things being stable from here on out. The insurance companies have gotten a hold on how things have changed, and it's been a huge shift in the industry. Players who were big a couple of years ago are going out of business. And so some things are starting to shake out. I would imagine that in the next couple of years, it'll be a lot more normalized back to what it was. Here's the truth, is insurance always goes up. We have a fire-only policy from when, 18-something? Mid-1800s. I have the actual policy in my desk drawer. The first year, it was $1.20 for $1,000 worth of goods in a fire insurance. He kept that policy for many years. I think by the end it's like $7. Even in the 1800s, it always went up. So it's not going to go down. You may occasionally get the gift of a lower rate, but it's going to be pretty rare. So.
But you think we've hit the step?
I think we've hit the step. I think we're ratcheted to where it needs to be, and it should be a lot more reasonable from here on out. We'll also see some new ways to do insurance. So there's a company down in the Houston area, and what they do is they basically buy capacity from other smaller carriers. And so you will be with this company, but you're actually with XY insurance company because they said, okay, we'll write $100,000 worth of premium for you guys, right? And so I think we'll see that coming to North Texas too, more of a co-op situation, because as we continue to grow, you know that the Dallas area was the fastest growing area in the United States last year, right? So as we continue to grow, we'll see more alternatives like that, and that should stabilize rates as well. Right now, a lot of this is because they have to, but a lot of it too is because everybody else is, right? So once we all reach that level, we had, I forget the company, but we had a company come in for years and years and years and tell us, everybody's doing 2%, they're gonna have to. And they were way ahead of the curve, but we're here now, right? So, yes, sir.
Just a comment on some of the policies. I worked in Alpine for about 8 years. The average towing on your insurance policy is 20 to 25 miles, which just puts you a little different place in the Chihuahuan Desert.
Right.
And the premium AAA policy will give you like 150 or 200 miles, so you could actually I was driving Saabs then, there wasn't anything in that part of Texas that would take care of it.
Right.
So, just a point.
No, that's an excellent point.
Read the fine print.
There are differences too. If towing is important to you, if you're like me and you drive nothing but crappy old cars, know how much you can get towed for and pay for what you want, or do AAA, which is always a smarter play because, again, it does count as activity on your policy. It's going to show up. It's going to affect your rates.
I've got a comment about towing. I just had my wife from Con Edison towed the Grapevine and with a flat tire, $400.
Yeah. Towing's not cheap.
So I got AAA I went from $50 a year to $99 a year. They'll tow up to 100 miles. So
right.
It makes a big difference.
Absolutely. And towing is a worthwhile coverage. It's probably the one you're most likely to use, frankly. How are you going to use it? AAA is a smarter bet in a lot of cases. It's not that it's a smarter bet. It keeps it off that insurance record, and so you're better off. Yes?
Justin, speaking on towing, what if you go on a long road trip in your classic car and it breaks down and you want to bring it back home? What's the most reasonable way to get it back?
Hire a truck.
Okay.
The insurance company won't pay that much. Even I think the max towing you can get on insurance policy is probably in that 100-mile range. So what they're going to do is tell you the closest place where it can be fixed, right? And then you can hire a truck to bring it home. No one's going to tow it home. We actually had a client who wanted a truck towed from Atlanta to Dallas, and he wanted the insurance company to pay for it. And I was like, well, that's a lot of 25-mile tows, dude. So get ready to make some phone calls, right?
Insurance score was interesting. Can I request that from my insurance score?
No, you can't see it. Never see it. It's a secret, and each company has its own way they calculate it, different weights for different things. You can see it in the rates that you pay. You can ask the agent, hey, what's my score? Because some of them do A, B, C, right? But it's not, it won't tell you much. It's just make sure that you follow some of the rules. Stay the same place, high limits, pay your bills, right? Anything else? Yes, sir.
Electric cars. I was talking to the fire marshal at Farmers Ranch, and their new procedure is you call the fire department, your house on fire, they're assessing as they're driving up how this fire started.
Right.
You know, so the police department, if you're electrical, typical fire, and they see fire coming out of your garage, first thing they think of is there a damn electric car in there.
Right.
And he said if there is, their plan is they back up and start spraying water on their neighbors' houses.
Right.
So therefore, it costs a lot to insure that electric car, and now it's a fire hazard that you're putting inside your house. So now the risk for the homeowner's insurance coverage is also going up.
Right.
So you're screwing yourself both ways.
Yeah, electric cars are expensive because they're most likely to be, right, they're also more likely to be totaled. If you hit the wrong pothole and poke a hole in your battery, that's it, right? So electric cars will be more expensive. New things are always more expensive until the company's figured out. And it takes years to figure it out. Like Rivian, we had a client call us with a Rivian, and Rivian was really gangster about it because they wanted proof that he was insured on that car. And that's not really how it works. You have a couple weeks to get insurance. You have a grace period, right? But he called us and he's like, they won't deliver it until I show them it's on a policy. And we're trying to find him a policy, and it's a brand new car, first one we'd seen. Rivian had insurance. So they were strong-arming him into buying the Rivian insurance through Nationwide. That was what happened. Electric cars are always going to be more expensive. Explore your options. The newer, weirder car you've got, the more expensive it's going to be. And so just have an awareness that that's how it works.
The Rivian's bankrupt now. So.
Yeah, I mean, a lot of them are going to be. How's your Fisker doing, right? So any other questions? Well, I hope you learned something. I always enjoy doing these talks. And if you have any insurance questions of your own, please post them down below. I would be happy to answer them in the chat. Thanks for watching and subscribe. See you next time.